All right, stop overcomplicating your trading, guys. Trust me when I say this, you don't need quarterly theory, you don't need standard deviation, you don't need market maker models in order to succeed in this industry. If you can understand this one small thing that I'm about to teach you in this video, your trading will change forever. So understand this small thing. Price only does two things. It takes out highs and lows and then it goes into a fair value gap, or it goes into a fair value gap and then goes up to take out the highs or goes down to take out the lows. This is how price moves. And if you can understand this one small thing, you can build a model out of it. You will know exactly where the market is going to go. You can find your daily bias. You can find your weekly bias. You can find even your monthly bias, right? This small thing that I'm about to teach you in this video will change your trading forever. You will not need anything else other than this. If you go and watch other videos after watching this video, then that's on you, because what I'm about to teach you is all you need. So without wasting any more time, let's get on with the video. So over here, you can see that we have a high, right? And we have a fair value gap in the discount. So whenever price takes out the high, we can anticipate that price will now go into the fair value gap. It will rebalance itself into a fair value gap in the discount. All right. So once we have taken out the high, so primarily we want to be on the daily time frame if you are looking to find our daily bias. All right. So on the daily time frame, right, this is the entire model. So listen and watch carefully. So on the daily time frame, we take out the high, right? Now to confirm that we're going to go ahead and fill in this fair value gap, we have to drop down to lower time frame for confirmation. So on the daily, we took out the high, so we will drop down to 1 hour time frame. Now, once we drop down to 1 hour time frame, we are looking for a market structure shift. This is very important because that will confirm that direction, that will confirm our bias. Okay. So once you drop down on the 1 hour time frame, all you're looking for is a market structure shift. Now over here, you can see that we have had a market structure shift. Now that alone confirms the bias for us being bearish. All right. Now, how do you actually enter into the trade, right? So this is very simple. All you're looking for is a buy side liquidity sweep, right? So you're looking for any high to form, right? So over here, we have a high formed here. Now you're waiting for price to take out that high on the 1 hour time frame. Now, once you have the high taken out on the 1 hour time frame, you have to drop down to 5-minute time frame. So we are going from daily to 1 hour to 5-minute time frame to frame our trades. All right. And our take profit level, the first take profit level is going to be this low. So now once price has taken out the high on the 1 hour time frame, we have to drop down to 5-minute time frame. Now, once we drop down to 5-minute time frame, we are looking for another market. Oops, that's way far above. So we are looking for a simple market structure shift. And after we have a market structure shift on the 5-minute time frame, we can then look to take our entry from the fair value gap or an auto block or a breaker block. So it will look something like this. This is going to be your first take profit level, and then you can leave the runners until your higher time frame draw on liquidity is hit. Very simple, guys. Just we take out the highs and then we rebalance the price rebalances itself into a fair value gap. And similarly, if I remove this, right? Let me remove this quickly. All right. So similarly, what would happen is that price will go into a fair value gap, right? So once price goes into a fair value gap, we're going to have a high formed here, right? So highs and lows are called external liquidity, right? And the fair value gaps are called internal liquidity. So in simple words, we go from external to internal and internal to external. So we are in the fair value gap. So we can expect that we can go ahead and take out this external liquidity, which is a high. So similarly, we will drop down to 1 hour time frame and we would look for a market structure shift, right? Once we have a market structure shift, we are looking for a liquidity sweep, right? So we will wait for a sweep on the sell side liquidity, and then we will drop down to 5-minute time frame, and then we will look for another market structure shift. We will take our entry, target these highs as our first take profit level, and then we will target the 1 hour time frame, daily time frame, the higher time frame liquidity level, which is going to be this is going to be our your final target. So this is going to be the external liquidity. So in this example, we went from internal to external liquidity. We went from fair value gap to the high. So this is all you need. This is literally all you need, because price moves like this. There's no other way that price moves in, right? This is the only way the algorithm works. It takes out highs, it rebalances itself into a fair value gap, or it goes into a fair value gap and then goes ahead and takes out the highs and lows. So let me give you guys some examples and you will understand what I'm teaching in this, in this video. So yeah, let's move on to the example number 1. All right, guys. So here is example number 1. So now understand one thing. This works on all time frames. So currently we are using a combination of daily time frame, daily time frame, 1 hour time frame, and 5-minute time frame. Similarly, you can use the combination of a weekly time frame, 4-hour time frame, and 15 minutes time frame. And then on the intraday basis, you can use the 4-hour time frame, 15 minutes time frame, and 1-minute time frame. However, I do not recommend going any lower than that. All right, it will affect your psychology. So here is example number 1. I'm looking at Euro AUD on the daily time frame. So initially we would be looking for a purge on the external, and once we have taken out the high, my eyes go towards this fair value gap in the discount. Right now, if I drop down to 1 hour time frame, you will see that we had a market structure shift. So this was the low, and we had a beautiful market structure shift, a beautiful displacement. Now we're simply looking for a purge on the buy side liquidity, right? So over here we have a high, and we're looking for price to take out this high. Now once that happens, I have to mark out this low here. This is the last low before liquidity sweep on the 1 hour time frame. Remember that. Now we simply drop down to 5-minute time frame, and we have this low here. So let's see if price gives us a market structure shift. We go even higher, and this is going to be our market structure shift level. We are waiting for a body closure, and we had a body closure right here. Now we have consecutive bullish candles, so that is our auto block, and we would go short just here. Our stop would go right above the high, right? And we would target this low, and this would have given us a 1 to 2 risk reward. If I drag this line, you will see that we actually had equal lows here. So this would give us 1 to 2. So let's see how this plays out. And as you can see that the take profit level was hit. Personally, I only go for 1 to 2 or 1 to 3 max, but you can, in most cases, you can hold till the high time frame draw on liquidity, which is going to be, if I go to the daily time frame just to do, you will see that price will fill out this fair value gap. So right here, you can see we took out the fair value gap as well. So this is how actually price moves, guys. This is all you need. You don't need anything else. So stop overcomplicating your trading. Let's move on to another example now. All right, guys. So here is example number 2, and this time I'm looking at GBP USD on the weekly time frame. All right. So over here you can see that we have taken out the high. And before I move to the example, I want to clear one thing. I suggest going from external liquidity to internal liquidity, right? I'd suggest going from highs and lows to fair value gap. I wouldn't suggest going from fair value gap to highs and lows, because for that you need a stronger bias. I mean, a stronger feel of the market. You have to look at the auto flow for that. However, from going to external to internal, you don't need to look at auto flow. You just have to follow this simple step. All right. So over here, you can see we have taken out the high, and we have a fair value gap in the discount. So this is going to be our draw on liquidity, the high time frame draw on liquidity. But to confirm that, we have to drop down to 4-hour time frame, and we have to look for a market structure shift. So we just slightly swept the liquidity, and after that, we had to look for a market structure shift. and you can see that we closed below this level. So now we had a market structure shift. So now we're looking for a sweep on the buy side liquidity, right? So over here, what do we have? We have a high, and once price went ahead and took out the high, now if I drop down to, then once price took up the high on the 4-hour time frame, we would then drop down to 15 minutes time frame and look for another market structure shift, right? So over here we swept the liquidity and we were looking for a market structure shift, and over here you can see after sweeping the liquidity we had another push to the upside, and after that we had this market structure shift here, and we have this single bullish candle that is our auto block. And if I mark this out like that, you can see we got our entry here, and my stop would go right above this high, and I would have gone for 1 to 2, but the target, the main target would have been this, right? So if I just put it like that, this would have given you 1 to 6 RR. So let me go to the higher time frame and let's play it out and see how it played out. So we almost hit take profit here, but you will see that we hit the take profit level. So this is literally all you need, guys. You can know your daily bias, you can know your weekly bias, you can know your monthly bias, and this is literally all you need. You don't need anything else. You don't need to watch my future videos. This is a complete package. This is literally like your model from now on. Of course, you will not get it right in the first try. You need to backtest. You will need to backtest. You will need to practice. But this is your bread and butter model. Like, you can use it every single day, every single week. It works on all pairs. It works on all assets. It works even in crypto. So let me give you guys one more example and then I'll end the video. All right, guys. So here is the last example. I'm looking at GBP CAD on the monthly time frame this time. And you can see we have taken out the external liquidity on the monthly time frame, and we have a fair value gap in the discount here. You're using our fib from this low to this high, you would get or actually this high over here, and you will get the fair value gap in the discount. So now let's drop down to daily time frame. So for daily combination, we would use monthly, daily, and 1 hour combination. So over here you can see we've taken out the external liquidity, and right around here this is a low, right? Even though the candle is bullish, but this is a clear low here, and we have a shift in the market structure. Now we're simply looking for a sweep on the buy side liquidity, right? And if I play this through, you will see that we take out the buy side. So now we have to drop down to 1 hour time from here, and we have to look for a market structure shift. So after price took out the buy side liquidity, we're looking for market structure shift. That happens right here with body closure, and we have an auto block in the premium here. So that is going to be our entry. Our stop would go right above this high, and I would target this significant low here. So let's see how this plays out. And you can see we got a tap and we came back again. But then finally we had our take profit level hit just around here, giving us a 1 to 4 risk to reward. Guys, this is all you need. Trust me, all right? Yeah, that would be it. I'll see you guys on the next Sunday. I hope you guys enjoyed this video. Subscribe for more, and goodbye.